Job openings jumping in August, beating analyst expectations. 8 million openings, signaling strength in the labor market. Joining me now, we've got Glassdoor lead economist Daniel Zhao. Dan, great to have you here as always and get some of your insight. I mean, you see a print like this, what goes through your mind?
Well, unfortunately, I think that job openings number kind of masks some of the weaker numbers that are actually underlying this report. So we see that the quits rate and the hires rate fell actually a little bit in August and are now at levels that are more comparable to what we've seen in 2013 to 2015, that range in time when we were still coming out of the housing crisis and the Great Recession then. So I think that even though we got a strong job openings print, the underlying metrics of the report today are actually, unfortunately, much weaker.
And so with that in mind, I mean, talking about some of the weaker elements of this kind of comes back to what you're seeing more largely in employee confidence. And you ran a confidence index survey around this. What were some of the findings from that in where employees are looking across the labor market right now or the workforce and trying to figure out how confident they do feel or not?
Well, so with the Glassdoor Employee Confidence Index, what we find is that about 47% of employees have a positive 6-month business outlook for their employer, so less than half. And that really goes to show you that employees have been feeling the strain of the softer job market and the softer economy over the last 1 to 2 years. And even though that's a little bit higher than where it was at the end of last year, it's still well below where it was before COVID. And I think that just goes to show you that employees have really been under a lot of stress over the last 2 years.
What do you think that's largely attributed to?
Well, I think that there is a lot of news going on right now about layoffs and hiring freezes. And certainly when we look at the job market, some of these indicators do point to cooling and softening. And so to some extent, I think folks see what's going on. And then on the other side, that softer hiring is also reflected both in terms of fewer opportunities for folks to go to another company, go find a job on the open market that's a better fit for them or offers a raise. But it also means less career opportunities internally as well, as companies are less willing to promote. Maybe they're not as willing to give as large a raise. And again, without more opportunities on the open market, folks are feeling a little bit stuck in their careers right now.
You know, it's interesting as well, looking through some of the policy changes that companies are making and how that might be playing into attrition, where people leave a job because a policy has shifted or the scope of work has shifted or the technology is not up to snuff for what's required of that employee. You know, how much is that also playing into the movement that we are seeing in the labor force right now?
Well, we are seeing actually that there's a real lack of healthy turnover in the job market. The quits rate is below 2% for the first time since June 2020. And that really goes to show you that employees feel like they need to hunker down. They need to prioritize job security. They can't afford to take a risk on finding a job that is a better fit for them, whether that means more career opportunities, higher pay, or better location, or better remote opportunities. And in fact, I think that's part of the reason why you've seen some companies push harder on return to office or other changes, because they know that the balance of power has shifted, and they know that, for example, they can push on return to office because remote workers don't have other remote opportunities that they can turn to on the open market right now.
Daniel Zhao, Glassdoor lead economist. Dan, great to always get some time with you. Thanks so much.
Thanks.